Welcome back to Trader Sage. Today is Wednesday, April 6th. You're going to look for opportunities to identify our edge in the market without forcing these opportunities. We actually like 5 minutes out from the market opening. So let's see what we can get through in that time. I'm going to make this video pretty brief. I have been in the lab, haven't been lacking, so to speak. So, but this is a tiny little fair value gap here. And you can see this is the high of it, this is the low. The dotted line is the midpoint, and you can see price. But this one stabbed into it, ran these highs, and you have this nice bloody week that literally stopped inside of that fair value gap again. And we also treat wicks like gaps. So let's see what that looks like. Quarters, and let's walk that out. So that literally held 50%, and then let's just drag this, make sure that everything that we drew is going to show on the lower time frames. All right, so we know this red line is the midway point of this wick. And obviously price held at 50%, so we can kind of accept the possibility that price wants to go higher, especially with this bullish fair value gap here. Before this candle was created, at the opening of this candle, then we had this range, right? We had this range here that needed to be filled. Let's experiment together. Like, why not, right? All right, so let's see if we can find some opportunities just in that alone, right? Anyway, that's what I will be targeting initially. It would be to like rebalance this price range. But also you have here that price reclaimed this this bullish order block. Anyway, and you can also do like a halfway point of the body of this candle, treating that as an order block, bearish order block. So let's see what we got here. Didn't quite reach that level, and I respect it, right? But anyway, I'm probably going to delete this, but let's just see what's up, right? So we got the weekly, and then this delineates a new start of a new week. So this was Monday, this is Tuesday, and this is Wednesday. And you can see that price ran this high, kind of ran this low. So we have some displacement here, and we have this inverted bearish fair value gap. Actually, I'll experiment in show. All right, so yeah, well, all right, so that was immediately rebalanced, and then price came back down into that rebalance twice, and then got up, right? Anyway, let's turn this off, and let's turn this off. I'm saying turn it off, I'm literally deleting it, right? So don't think it's gonna come back later. All right, so you can come to the daily time frame, see what you see. You have a shallow run, stop run here. So we have a run on buy side that we identified there. Run on buy side liquidity. Then we have this violation of this bullish fair value gap that turned that into an inverted fair value gap, right? AKA a change in the state of delivery. And we're going to make that like, right? So we have this daily level, run on stops, our price violating a lot here. Try not to say too much, right? Like, our price violating these order blocks, right? Which also signifies a change in the state of delivery, which you can take advantage of on the lower time frames, of course, if you didn't spot it here. And you can see here, price respected that inverted fair value gap, consequent encroachment or the midway point. Got down into that weekly imbalance. You didn't like the weekly fair value gap, then it's a stop run on the daily, right? Stop run. So that's off that, right? Stop run. What's the rules, right? Go to the lower time frames, look for a fair value gap, right? So we're just gonna play around with that. So we had that stop run here. You don't have that opportunity into this inverted fair value gap, this bearish fair value gap on this time frame. Let's continue to walk down. Let me turn that off. Turn that off. So that's the stop run, daily stop run, right? This running below this low, which is also a weekly low, high time frame key level. Also have a stop run here, and then you have price rejecting this order block here. High probability order block because it ran stops. So it's pretty much respecting the opening of this down close candle. And afterwards, pretty much have these PD arrays being violated here. So just looking at it right here. There's a couple of entries, but let's see what else we can do. Let's go a little lower. That's the model, right? Okay, so we have that run. So look at this time frame here. This one is more exciting, right? So we actually work in two time frames, two high time frame perspectives, right? We work in the weekly time frame perspective. That's this bullish fair value gap, and the daily or the weekly as well, that we identified that price ran that low back here, right here, but it also ran this low here. And then we have but you still all right, so boom, right? Let's go back, right? So we had to run. So this is a daily. We identified a stop run on the daily. Boom. So you say external range. You could also utilize this reclaim bullish fair value gap here on the daily. Do that too. It's gonna eyeball it. Well, that's magnetized, right? But see what it does here. Let's make that like a nice. It's really the colors with like kind of low key trash though, but whatever. Let's see what that looks like. Let's see what it looks like. Anyway, all right. So that's like still that daily level, right? That's why I kind of highlighted it. Daily. So you have a daily stop run, reclaim of a daily bullish fair value gap, and you can see this offers opportunities here, here, optimal trade entry, long, boom. But we already identified we have that. We have the 2022 mentorship model ready. It's significant here. You have this small gap here. This is E level market structure shift here. We have a slow bleed out, retracement into an imbalance after a stop run. So that would be your entry here, low risk buy, optimal trade entry, long. And you can go wick to wick. Okay, make that a little bigger. I really like. All right, so boom, right? So we have that, right? You have the entry model. Entry model 70.5. So we have an entry model 70.5 optimal trade entry long. Our stop is below this low here, which is false to stop run, run on stops. What's the rules, right? Run on stop, break in market structure. So low key, you could have counted this as a break in market structure. You could have counted this as a breaker as well. Low, high, lower, low, breaker. Here's your entry, rather, here would be your entry here for the immediate run. Could have entered here. Pretty much return back to your entry point, return to origin, and then ran the high. So that's a small trade. Definitely is a 5 minutes. So that's a intraday trade. You're utilizing, as we also looking at a daily chart for entry here, daily chart model, right? And so we have daily targets as well. So there's that. And in general, this model, optimal trade entry, like ICT recommended, if once you reach 2 standard deviations, that's collapse the trade, right? Obviously, you can hold on and say, hey, this is what I'm looking for. It's this high, or you're looking for some degree between these ranges. That's on you, right? Or you're looking for some type of divergence. But that would be your 2 standard deviations of this range. So optimal trade entry 70.5 or 61.8 into that 2022 mentorship model, the bullish fair value gap. And it's just offering a bunch of opportunities to go long again. Bunch of but yeah, 2 standard deviations, you out, or the midway point. I don't remember, but that is an inverted bullish fair value gap. So that would have been enough to consider exiting the trade here once it reaches, and you can see prices reacting to it, kind of holding above this order block or this bullish fair value gap here, kind of holding above it. So it gave a couple of more opportunities because you don't have a significant break in structure to consider to warrant taking a short. And there's no displacement, aka there's no blood in the water yet, right? So here you go here, boom, boom. Balance price range here, kind of didn't do much. I wonder if this was, anyway, this is right now 605, ran up into this balance price range, which offered that short opportunity here. Probably going to, this is the balance price range I'm referring to. Small little bullish fair value gap and a bearish fair value gap, retracement into here. And now hopefully we see price holding below this inverted fair value gap. And again, this is an inverted fair value gap on a daily time frame. So aka inverted fair value gaps, aka distinguishes or denotes a change in the state of delivery, and you see price failing along the consequent encroachment of that level. So we can see what price does from here. It's not a kill zone necessarily. It is the Asia session. Doesn't mean that trades outside of kill zones are not profitable, but we are playing the game of probabilities, right? So this is, you want to see what price does with this level. And that's all I got. Pretty good. 14 minutes. I have a bunch of other stuff to share, but you know, anyway, I'm out. Please like, comment, subscribe, tune in.